COVID's second wave, we see that the rural economy was badly hit with respect to its impact in the first one. Overall, the auto sales number was also badly hit with one particular segment whose sales has been impacted. And not only that, we have been seeing increasing sales trend on a month-on-month basis was the farm equipment segment. So this space is turning out to be really interesting, and in this segment only we were today joined by the management of VST Tillers, which hold 50% of the domestic market share in the tiller segment. Just to highlight, the company has been experiencing turnaround with the Q4 financials. This time the company reported a profit of 13 crores versus 3.3 crores last year. Not only that, FY21 has been an exceptional year for them because they have achieved highest ever turnover of 764 crores. Along with that, their margins also improved from 7.2% in FY20 to 17% in FY21. So good growth coming in from the company. As along with this, we see that the share price is up 53% in the past 1 year. Going forward, what is the growth outlook by the management of the company? Today, to highlight more on this, we were joined by the CEO of the company, Antony Cherukara. Firstly, commenting on the current demand scenario, he informs us that he is of the opinion that the current sales trend could be due to the pent-up demand, and going forward, he is optimistic about this sales to continue and good growth across segments. And as we know that the commodity inflation is also hitting the margins of the company, as well as we see that most of the auto companies have been taking price hike. In the case of VST Tillers, in the current calendar year, they have taken a price hike of 4 to 5%. But in respect to that, we see that the commodity inflation was around 8 to 9% in this time. So VST Tillers expect that this could impact their margins, and in the financial year 22, they are expecting and hopeful of maintaining the margin range of 14 to 15%, which is now at 17% in FY21. Currently, due to the good demand, they are at 80% capacity utilization, and they are hopeful of witnessing operating leverage benefits as well. Now, as we head into FY21, so company shares very good growth numbers where they expect their bottom line to grow by 12 to 14%. Along with that, this could be helped by 15% growth in the tractor sales and 20% growth in their tiller segment. They recently tied up with an international company, Zeta Tractors. This was a very interesting tie-up where the company informed that till now they were holding very good market share in the compact tractors. But with this collaboration, they are eyeing to the high horsepower tractor segment where they with this tie-up they are currently in the product development stage, but they will shortly in the next financial year will be coming up with their first product launch, and subsequently the next 3 years we'll see more of the launches coming in from this collaboration. One key factor that we tried to ask from the company was how they plan to utilize their reserves, because as of March 31, the company has 659 crores of reserve, which is a good amount. But the company did not give much of a clarity over there. What all they said was that in the next 3-4 years, they have good plans to invest that into. Currently, they are into the product development and diversification stage, and nothing major has been planned to utilize this fund. But overall, they expect export sales also kicking in and helping the overall numbers, where in financial year 22, they are expecting this segment to grow by 30 to 40%, and they are looking for growth in the Eastern European countries and African region as well. So overall, great set of numbers coming in from VST Tillers, and the outlook by the management, the future demand growth aspects are also very positive.